Bulls and Bears panel thinks the Fed should stop talking and significantly raise interest rates, such as up to 8% or more.
Terry Keenan is joining us. Jonas, Max Ferris, Todd Wildman, and Peter Schiff. Let me guess. Among this quadrant here, I suspect Peter Schiff thinks the 8% mark is right.
Who knows? It could be higher than that. I mean, first of all, regardless of what the Fed wants or the Treasury wants, the dollar's going a lot lower, and just about every American is going to suffer as a result. And the Fed statement today, I think, was extremely dovish, even for the Fed. They basically said, we expect inflation to moderate.
With the exception of Richard Fisher.
Well, but the overall statement, they expect inflation to moderate next year. They've been saying this for years. There's no evidence of that. All the evidence is the opposite of that. They did acknowledge that inflation expectations were picking up, but obviously the Fed disagrees with it. So basically what the Fed is saying is, we think it's going to be a sunny day, but we recognize that a lot of people are carrying umbrellas. That's all they're saying. And I think this is going to be very bearish for the dollar in the near term.
Jonas, I got to ask you something. Here's the situation. The Fed tends to look toward the oil futures markets to get oil prices. Oil futures were coming down. So does that mean that the Fed has been underestimating inflation potentially?
I don't think the Fed has been underestimating inflation as much as everybody thinks. Let's not forget the Fed has what they consider inflation, and they use things like home prices are factored as a bigger part of inflation than some of the energy. And they are going down a lot. We just saw that this week. So and a lot of non-necessity items are falling very fast in price. And you
can't afford them anymore.
Let him speak. He's holding his one side.
That there's 10% inflation is a big bunch of hooey by all the gold bugs.
No, it's not.
These are economists who've been developing this for dozens and dozens of years.
They haven't.
And things like, for example, everyone criticizes that the quality improvement shouldn't be factored in, but the bottom line is cars today are cheaper adjusting for inflation than they were when you factor in all the...
All right, but Terry Jonas is leaving out one word, oil. A lot of the pressure on oil comes from the weakness of the dollar.
You can't say there's no inflation when there's inflation in the things that you need to live, and there's no inflation in the things that you really don't need, like a flat screen TV. Right. I mean, there's a lot of inflation out there, and I feel like you could draw a little box right around Ben Bernanke every time you see him walk around, because he is in such a bind here. We used to say that Greenspan was the maestro. I mean, he was just playing checkers. Bernanke is trying to play a three-dimensional game of chess here, trying to prop up the dollar, keep the economy going, bring down inflation.
Regulate.
It's not working so far.
He's Ben Bernanke to the
But he's not trying to keep down inflation. He's creating as much as he can. He's just hoping nobody notices. Because he doesn't want, when I said they need to raise rates up to 8% or higher, the problem is we got to get rid of the inflation. It's going to mean there's going to be a disastrous recession, but we got to suck it up because it's worse what we're doing.
Well, Todd, what do you think? 8%? Is that where we need to go?
No, let's go back to 4%. But let's do it real slow and give the market time to adjust. And, let's try to put it off as long as possible, into this year. But, it's true. He's in a box. He would like to soak up the excess liquidity, get gold back below 500. Sorry, Peter. But, he can't because we're in a slow growth. We're almost teetering on a recession. People are spending 3 times as much on gas as they did 3 years ago. It's just not working.
We're in recession.
What do you do?
All right, but Jonas, what about the multiple tasks that the Fed has on its plate right now? Is it too much to do all the things that it's being forced to do, including regulatory responsibilities that the SEC used to have?
Well, I like what the panelist said before we started this segment, which is you really want the dollar to fix itself naturally, and I think that's what the Federal Reserve is waiting for, which is what happens is as the dollar weakens, we sell more stuff and we buy less flat panel TVs and we sell more cars abroad because they're cheaper. That will fix it, and the Fed's hoping that kicks in before they have to do something emergency.
Here is a look at what's still ahead today on